Gas prices are now at a level we have never seen before. Overnight, AAA reported the nationwide average for a gallon of regular reached $5. That's up nearly $2 from 1 year ago. The fastest inflation rate in more than 40 years doesn't seem to be slowing down anytime soon. According to the Labor Department, consumer prices surged 8.6% in May. That's the highest figure since 1981. The economic worries are fueling a slump on Wall Street. On Friday, the Dow and S&P 500 index each lost more than 2.5%, while the Nasdaq fell more than 3%. Here to help us make sense of some of this is our CBS News business analyst, Jill Schlesinger. Jill, 8.6% increase in May, and the greatest in, 41 years. What happened?
Well, this was a worse than expected report. We did think inflation was going to tick down a little bit. Primarily, the big categories are just going up so much faster than anybody thought. So you mentioned gas, all of energy, the whole complex up by more than 30%, food up more by more than 10%. But even things like shelter, so renting and owning homes, it's more expensive. Some of the subcategories are really intense. I just want to give you some of these. Food at grocery stores up 11.9%. It's the highest increase since 1978. Wow. We also know that the war in Ukraine really pushing up prices for a lot of wheat products, so cookies and pasta. So, what the problem is that you'd say, I'll eat cheaper tonight,
right.
Rice and beans. And you know what? Everything is more expensive.
Everything is more expensive. I can't find anything that is less expensive. The Dow is now down 9 of the past 10 weeks. It tested a bottom, we thought, a few weeks ago, and then came back up, and now it's gone back down again. I'm not going to ask you if you think investors should buy or sell, because you're just going to say don't panic, which is the correct advice. But how long do you think this volatility lasts for?
I think this volatility will continue for a long time, because remember, we're coming off of 3 unbelievable years for stock investors and bond investors. This year, things really did change. Why? Because high inflation, but also because the Federal Reserve is raising interest rates. So there's sort of this strange convergence of fear in the investment community. One is like, oh my God, with inflation higher, that's going to eat into corporate profits. And with inflation higher, now the Fed has to raise interest rates, also eats into profits. And consumers are spending a lot of money right this second because they had this excess savings. Remember, that savings rate jumped up to over 30% in April of 2020. The savings rate is now at 4.4%. It's the lowest in 14 years. So all these things converging makes really nervous investors. Stocks have sold off. The S&P 500, the broad U.S. index, is now coming towards that bear market territory. We're down almost 19% from the recent high earlier this year. 20% is a bear market. It's not a magic number. It's just a marker. But it is a very tense time on Wall Street.
So the Fed is meeting for 2 days next week. Concerns over what they might do, and specifically whether or not they may trigger a recession.
Yeah, this is a really hard time for the Fed. They definitely started too late in raising interest rates, so inflation has gotten away from them. And that means they're chasing rates higher. They have already raised interest rates 2 different times this year. The first by 0.25%, the second time by 0.5%. Next week, they're expected to do another 0.5%. But be clear, when we were talking about the Fed last time I was on the program, we said, it's definitely 0.5%. All of a sudden, there are a lot of whispers. Maybe they'll go by 0.75%. Maybe they've got to raise rates by more faster than expected. And there is some concern, as you note, that the Fed itself can cause a recession by raising rates too quickly.
Yeah.
And this is the real problem for the Fed. They are trying to thread that needle, and boy, it's a hard job. But I'll tell you what, next week's going to be Jerome Powell 101. He is going to stand in front of those cameras. He is a tough guy. He's very sure of himself. And I think he's going to say, we got this.
Quickly, odds of a recession right now?
High. Unfortunately. And so when I say that, I just want to be clear about one thing. Recessions are normal. We've had 13 since World War II. We will have a recession. I don't know if it's this year, but it will be within the next 18 months. We'll probably have some sort of softening of growth or a recession.
And there you have it. Jill Schlesinger, thanks so much.
Sure.